Hey everyone, it's Matt with TradeTimingPro.com. Thanks so much for tuning in. In this video, we're going to be taking a look at SQQQ, both on a weekly and a daily basis to time our entries. Again, if you're enjoying the content in the video here, please do subscribe to the channel. We're going to be putting up another video in the first week of June about SQQQ, which I think you're going to want to see, and you'll kind of find out why in a few minutes. Also head over to our website, TradeTimingPro.com. You'll find a whole ton of information that's helpful in timing your entries into the markets at that site as well, TradeTimingPro.com. Up on the screen here, we've got a weekly chart of PSQ, and we're actually going to be taking a look at the non-leveraged ETF because when you're trying to do technical analysis and trying to get a sense for when to time your entries into a leveraged ETF using technical analysis tools, you're often going to find that there's slippage involved and your accuracy is better if you look at the non-leveraged ETF. PSQ is a non-leveraged inverse ETF to QQQ, and so we're really taking our signals from PSQ to enter into SQQQ. I hope that makes sense. So up on the screen here, we do have PSQ. If you do compare them side to side, SQQQ and PSQ, they're going to look nearly identical. There'll be some more slippage in SQQQ, however. One thing to note for those who are kind of newer to SQQQ and using leveraged ETFs, especially inverse ETFs, is that this is a naturally deteriorating security. It's not meant to be held for an extended period of time, weeks or months, really. The markets are designed to go up, and so SQQQ, PSQ, they're going to go down over the long run. It's just how the stock market works. The stock market was designed to go up, not down. And so I don't want to digress too much here, but on the weekly chart, I'll explain kind of what we have for indicators so you understand what you're looking at. The red line is our Trade Timing Pro algorithmic model that helps us use the calendar to predict when to be looking for long entries into a particular security, this one PSQ or SQQQ, and so the dates that I have listed there at the sort of the troughs on each one of the lines indicates when we should be looking for a long entry, whereas the peaks you can see are areas where there's heightened risk for a downside, and so we want to kind of avoid looking for long entries at that particular time. The model, the Trade Timing Pro model, when you just use that model alone, has around 86% accuracy, so we're really happy with it on all time frames. But this particular one we're going to do weekly and then hop down to daily. And on the bottom two panels here we have your typical accumulation distribution line, and then we have an on-balance volume down here at the very bottom panel. The orange line that you see overlaid on the chart is actually a performance indicator. It tells us how the security is doing in relation to the total stock market. It usually stays, for example, as you can see on this chart, it stays in fairly good lockstep with the price action. That doesn't always happen if you get price falling, for example, on a security, and then the orange line is starting to lift up and you see a divergence. It's another signal for you, not a trigger, but a signal that helps you, that adds weight to the evidence that the security might move in the opposite direction. So that orange line is merely a performance comparison a performance comparison between the equity or PSQ and the total stock market. And as you can see, since 2022, it's been falling along with the price, so it's been underperforming the markets. The black lines here are just your simple, everyday, run-of-the-mill price channels. You can adjust these on most software. We just use them as an indicator to help us, again, add weight to evidence of a move in a particular direction. And so I've marked off some dates that are kind of worthy to take a look at. The model gave us some signals here to be looking at SQQQ at certain particular points in time. Again, in July of 2023, we would have known this well in advance, just like we do over here. It told us to start looking for a long position. Again, these are not triggers, these are just merely signals, just like any other indicator. However, you had a pop to the upside, and that's just one of these wonderful pull back and go sort of situations. So around the first week of July, we had a signal to start going long, to look for our long entry, look for the trigger. This was your first pop up. It pierced the top of that price channel, came back down, and boom, you were off to the races until I think that was probably very early November. And so then again, we had another drop, November of 2023, late November. Tough part about going long in PSQ or buying to hold PSQ or SQQQ in sort of that October-November time frame is that it's historically a bullish time of year. It's really hard to go long in an inverse ETF at a particular point in time when the markets are bullish, and we are in a bull market. So you're kind of, in our opinion, playing with fire, sticking around inside SQQQ or PSQ for too long. So everything we're going to talk about here in the video over the next few minutes, kind of take with a grain of salt and do your own due diligence. But anyway, so at the end of November of 2023, we had a signal to start looking at the calendar for a long entry. And then it really never came because we never got above any kind of downtrend line. Maybe here you could argue, but this is a pretty violent downfall. It never really got even above the halfway point. But then in March, things started to turn around. We had the Trade Timing Pro model lifted up a bit, and we had in March 11th, 2024, that week, we had a signal that it's time to start looking for an entry. And again, the one difference is that as the price is falling, it starts to kind of curl around a little bit. You can use the indicators, the on-balance volume and accumulation distribution down the bottom to kind of add weight to your evidence to start looking. And sure enough, it did pop above the price channel, but is pulled back. So this may actually be one of the most ideal entry setups that we've had since late 2023. So just something to be aware of. And sure enough, what we have here is the model telling us in June, very early June, we should be looking for our entry, because we had our first signal here in late March. Again, this is a weekly chart, so this is a bit larger time frame. We're going to look at the daily in just a moment to get more precise. But this, again, alerted us to the fact that this was happening. You could also say that the price was falling. If you look at this divergence, the price was falling. Accumulation distribution was really flat. I didn't really have much information being printed here in terms of on-balance volume, but nonetheless, it indicated that by this particular time, institutions may have already started to acquire shares. All right, and that actually appears to be what's happening at the present moment. We've got, if you ignore the Trade Time Pro model and you just look at pure price action and accumulation distribution on balance volume, we've got a negative divergence a positive divergence on the indicators, letting us know that accumulation distribution is starting to gain some lift, and so is on balance volume. I don't know if you can see it down here at the bottom of the chart, but it's actually lifted a little bit higher than the February-March time frame there. Whereas price is falling. So that indicates to us that the price momentum to the downside is actually falling, and then SQQQ might gain some upside momentum starting the first week of June and then into the first week or so of July. So we're going to hop over to the daily charts, and we can get more precise, and you can kind of see how the model helps us and what we do to kind of take signals and what we're looking for to go long. So again, being in a bull market, it's hard to play a bear, equity like PSQ or SQQQ. You're just, your chances of getting stopped out and whipped around is just so much higher. But nonetheless, we did apply it, and we can see that you had, this is a daily chart, so this is a tighter time frame. You did have signals to start looking to go long here, and then again, you're out here for a small profit at the top. You can look to go long here. You can argue that you probably would have broken even or so here. Again, go long here in these bars here, and again, break even. So again, you're fighting a bull market by going long SQQQ or long PSQ in these particular cases. In our opinion, you want to move with the trend, and the trend is up. So, but again, that is starting to change just a little bit. Again, the model gave us a signal to look to go long here. Again, you would have broken, if you took your entry in sort of the beginning of the trading day in this bar, you would have broken even or possibly taken a small loss. Now this is where it started to turn around a little bit. We got another signal here, which I believe was sometime in April, probably early April, I believe, if my memory serves me from the markets. And then you had your entry right here as price broke above the channel after that trough. So that was a perfect entry. And again, you're only holding it for a few days, and you would have made a small profit had you gotten out in sort of this peaking area right here in the model. So this is where it gets interesting. On May 21st, we had a signal to start going long, or to look to go long, and you can see price was falling into that signal to go long. Prices popped above, but it didn't close above the price channel just yet. In fact, it came down and closed nearly right where it opened, and that candle tells us that the bulls and the bears were at in a real strict battle, and by the end of that trading day, the close of the last trading day on Friday, it was sort of a stalemate. But June 6th is where the model is telling us that we're going to be looking for really probably most likely between now and June 6th, we're going to see a pullback and then a launch up to July 2nd or so. The Trade Timing Pro model does not alert you to the actual size of the move. What it does is it helps us understand when to be looking. It's a calendar pegged indicator as opposed to a price action pegged indicator. So I hope that makes sense. It just helps us look to see where there's going to be points in time or on the calendar where we want to go long, and other times where the risk is too high to go long. We should be either taking profits, exiting, or just holding and watching and waiting. So the indicator is telling us right now, especially with some of this divergence happening, the price is falling in the pink line down here below. Let me just get rid of some of the editing. You can see the pink line down here is falling with the price, but the on-balance volume, or excuse me, the accumulation distribution is flattening out and gaining some lift, and on a daily basis, the on-balance volume is rising. So obviously, the downside momentum to PSQ and SQQQ is slowing down, and there's some traction to the upside taking place and materializing. So I'd be looking, if you're looking to play this, is to look for your entry, a good strong push to the upside starting on June 6th, around that date, and then into the first week of July 2nd or so. You want to be either exiting, taking profits, or certainly watching and waiting, because typically that period of time has a bullish bias for the markets, whereas PSQ, SQQ will drop, and the markets will typically gain some lift at that time, bringing SQQ and PSQ downwards. So I hope that helps. Again, head over to the website, tradetimingpro.com. Also subscribe to the channel if you found the video helpful, and be sure to tune back in the first week of June. We're going to update some of this chart, and we're going to see how we're doing with the model. Take care, and good luck and good trading.